Hello, I'm Mario Toneguzzi, Managing Editor of Canada's Entrepreneur. Joining me today is David-Alexandre Brassard, who is Chief Economist with the Chartered Professional Accountants of Canada, CPA Canada Association. Thanks so much for joining us today.
Thanks for having me, Mario.
Okay, we're going to talk a little bit about some of the GDP numbers that came out last week from Statistics Canada. Are we starting to see the impact of this whole trade war tariff situation on our Canadian economy?
Indeed, we are, Mario. We used to have there's a bit of a buffering impact to the pre-tariff. So businesses were exporting more to the U.S., building up their So American importers were building up their inventory, and that was buffering in January. But that buffer is no longer enough in February. So as you alluded to, GDP did shrink in February. And again, we still see that buffer. Manufacturing was up, but what we see is the uncertainty has made its way through other industries, and that's counterbalancing. For example, if we're talking about good producing industries, construction should be no surprise to you that it's contracting. There's a bit of uncertainty. It's driving down consumer and business confidence. So there's less building there. If we look also, the prospect of economic slowdown with the US is usually driving down commodity prices. So our oil and gas sector or commodities, they've contracted in February as well. So it's and also one last point, maybe Mario on that. There's industries which I call discretionary spending. So you could spend in those services, but you can also not do it. Mainly entertainment, restaurants, hotels. They've seen a simultaneous drop significant in February. And we see that in our day-to-day lives.
Now, obviously the one impact that we see, and we hear it in the media is the labor market, right? And so maybe talk a little bit about that. What is the tariff situation doing to the labor market?
Sure. The reason why we focus on the labor market, Mario, is the data comes out first. So that's the one that we're keeps up to date quite faster. And as you said, so we have the March data, and we should have April in the few days. First job loss since the big COVID wave in January 2022. It seems to be more businesses have stopped hiring because when I looked at the layoff rates, it was pretty much on par with historical rates. So uncertainty to businesses means hiring plans, investment plans are being impacted. So the job loss were modest, all driven by the private sector, has to be expected, and it led to a small hit on unemployment. It's gone back up to 6.7%. We're still lower than the bottom that we had in November, and the damage on the unemployment front is a bit mitigated by the fact that our labor force has not grown as much with the immigration policy kind of settling in. Maybe some details on where the job loss were. Alberta, Ontario, Quebec. So it indeed illustrates the fear of tariffs. Those are all provinces that trade a lot with the US. And more specifically for Ontario and Quebec, they're directly targeted. If you look at steel, aluminum, automobile car parts, they're kind of concentrated in those provinces. So that's the state of, and wage growth is also, which was strong, is a lot weaker.
Hmm. Um, Outside of Canada, let's take a look at the US. What's happening in the US with its economy throughout this
Sure.
time that we're in?
So strangely, Mario, when I mentioned the buffering and impact that the pre-tariff are having on Canada, the impact is opposite in the US. Imports, they're subtracted from when we calculate GDP, gross domestic product. So when we looked at the US has released its data for the first quarter. There's a contraction there, 0.3% to be precise. The first one in a few years for the US. And again, so imports are that they're the main story there, driving down. But also there's a bit of reduction in government spending, what DOGE has been doing. has impacted them. And consumer spending and investments were pretty healthy, but not enough to counterbalance that impact. But maybe to the point that you talked about the labor market is still relatively strong in the US. They had 175,000 jobs in April. Unemployment rate is still historically on point. The question for the U.S., as your viewers might think, is are we in a recession or not? Because the technical recession is 2 quarters of economic contraction. Now we've got one. The question for the second quarter is again that imports will play less of a role. Did businesses build enough inventory in the first quarter, and that inventory translates to production in Q2 to have some growth? That's the million-dollar question for economists right now.
Right. What about Europe? What's happening there with the economy?
So Europe was pretty strong in Q1, surprisingly strong. But surprisingly, when we think of Europe and its lower growth, but we shouldn't be surprised to think that capital might see Europe as a good destination right now. When the U.S. was initially it was fighting only with Canada and Mexico, the idea was foreign direct investments ever since the conflict between Russia and Ukraine began has been going to North America. So my reading was, okay, Trump's trying to hurt us to make sure that capital goes to the U.S. But now that U.S. has fired on all cylinders on all countries, capital is no longer heading to the U.S. as much. It's illustrated. The stock market's dropping. The dollar is getting weaker, and also treasuries are getting more expensive in terms of interest rates. So money's going to Europe a little bit more, and I think that's what we're seeing it in the numbers there. But of course, the impact of the tariffs will be harder felt in the second quarter. So we'll see where they land on that front.
Right. Now we're into the second quarter here of the year. What do you expect for this quarter for the Canadian economy?
Um, it's going to be negative. There's going to be contraction. As I said, the early indicators seems to point out that the situation is not great. Again, I mentioned housing. We see a drop in transaction. People not buying houses, but people are listing them. So usually that's indicative of quite a bit of uncertainty. Tourist activities, we're seeing numbers being quite down. Personally, I'm in Quebec City, and I went downtown a few times in the last few weeks. It's very slow. So usually it's fun for people to look at around them to see if you look at the main streets in your city and there's no activities, it's quite a bit of a sign that things are slowing down. So I expect a bit of contraction. We'll see where we land in terms of job lost. That's the very on the automobile front, we've seen a few shutdowns in Ontario's leading to job loss. And of course, the important things to note is that whenever you lose a job in an industry, you lose someone that's spending quite a bit of money. So that has spin-off in other industries.
Yeah, exactly. All right. Well, so that was great. I appreciate you taking the time to chat here on this.
My pleasure. Thanks for the invitation, Mario.
That was David-Alexandre Brassard, who is Chief Economist with CPA Canada. I'm Mario Tonaguzzi, Managing Editor of Canada's Entrepreneur. Thanks for joining us today.